Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. This is part 2 of sensitivity analysis: what it is, why it matters, and how to use it effectively. Environmental science. Environmental scientists rely on sensitivity analysis to model complex systems and assess how changes in inputs affect ecological outcomes. When predicting environmental changes, there's often uncertainty surrounding factors like temperature, precipitation, or pollutant levels. Sensitivity analysis helps identify which of these inputs hold the most sway over results. Take climate modeling as an example. By adjusting CO2 emission levels, scientists can predict how temperature or sea levels will respond. This allows policymakers to prioritize emission reduction strategies where they'll have the most significant effect. It's also essential in risk assessments for natural disasters, such as floods or hurricanes. Engineers and planners can use sensitivity analysis to estimate the impacts of variables like rainfall intensity or storm surge height, guiding the development of more resilient infrastructure and response plans. Engineering and design. In engineering, sensitivity analysis is critical for optimizing designs, ensuring safety, and reducing costs. Engineers often face challenges where small changes in components can drastically alter the performance of a system. Sensitivity analysis pinpoints which variables or parameters have the most influence, allowing for smarter design choices. For example, in structural engineering, sensitivity analysis can help identify how variations in material strength or load conditions affect the stability of a bridge. This not only ensures safety but also avoids over-designing, which can inflate costs. Product designers also use it to improve systems like engines or electronics. By analyzing which input parameters, e.g., power supply or material density, matter most, they can fine-tune for optimal performance. Additionally, in industries like aerospace or automotive, sensitivity analysis is crucial for meeting strict reliability and efficiency standards. Steps to conduct sensitivity analysis. Conducting sensitivity analysis involves breaking down a model into manageable steps and examining how changes in key inputs affect outcomes. Whether you're analyzing financial scenarios or designing engineering systems, a structured approach ensures reliable results. Define the model. Before starting, you need a clear model that represents the system or decision you're analyzing. Think of the model as the blueprint for your analysis. It determines how inputs interact and affect the outcome. Start by identifying the goal of your analysis. Are you estimating risk? Optimizing performance? Testing assumptions? Clarity on this point matters. Choose a model that matches the complexity of your scenario. For simple problems, spreadsheets or equations may suffice. For advanced systems, simulations or statistical models might work better. Ensure your model accounts for the key inputs, their relationships, and any constraints. The accuracy of your analysis hinges on this foundation. Defining the model is like building a foundation for a house. If it's weak or incomplete, everything else risks collapse. Identify key parameters. Not all inputs are created equal. Some have minimal effect on outcomes, while others can drastically change results. Pinpointing these key parameters is incredibly important. Here's how to find them. List all variables. Write down every factor that might influence the outcome. This could include costs, weights, rates, or customer behaviors. Rank by impact. Use intuition, experience, or data to identify which inputs likely have the most significant effect. Historical data, expert opinions, or pre-analysis tests can help. Prioritize complexity. Focus on parameters that are uncertain or prone to variation. These will tell you the most about your model's sensitivity. Once you know what matters most, you avoid wasting time tweaking inputs that hardly move the needle. Analyze results. With the model built and parameters identified, it's time to run the sensitivity analysis and interpret the outcomes. This step provides the insights needed to make meaningful decisions. Here's what to do. Run scenarios. Adjust one variable at a time or multiple variables simultaneously, depending on your method. Record the resulting outcomes. Look for patterns. Which parameters cause the biggest changes? Are the relationships linear, consistent impact, or nonlinear, unpredictable behavior? Focus on key takeaways. Highlight the inputs with the most influence and evaluate if those results align with your expectations. By the end of this step, you'll know which factors to prioritize and where adjustments are most impactful. Think of the analysis as your compass. It directs your decision-making process by pointing out what really drives results. Challenges in sensitivity analysis. Sensitivity analysis is a powerful tool, but it's not without its challenges. While it provides valuable insights, you might hit a few roadblocks during the process. Understanding these obstacles can help you approach your analysis more effectively. Data uncertainty. The quality of your sensitivity analysis is only as good as the data you're working with. If your data is unreliable or incomplete, it can lead to misleading results. Variability in inputs. Real-world data often fluctuates. Whether it's market trends, weather forecasts, or material properties, these variations can throw off your analysis. Limited historical data. What if you don't have enough past data to work with? This gap can make it hard to predict outcomes accurately. Measurement errors. Data collection isn't always perfect. Small inaccuracies in inputs can snowball into significant errors in the results. For example, let's say you're modeling crop yields based on rainfall. If the rainfall data is inconsistent, your model's outputs will be shaky, leading to poor decisions. Reliable, high-quality data is the backbone of any good sensitivity analysis. Model complexity. The simpler the model, the easier the analysis, but not all systems are straightforward. Many real-world models are complicated, with numerous variables interacting in unexpected ways. Too many variables. When you're juggling dozens, or hundreds, of inputs, tracking their impacts becomes overwhelming. Nonlinear relationships. Some systems don't behave predictably. A small change in one input might lead to outsized or erratic shifts in outputs. Interactions between variables. Variables don't exist in isolation. They often influence each other, making it tough to pinpoint which one is driving results. Picture a tangled web. Adjusting one strand affects the entire structure. Overly complex models can turn sensitivity analysis into a guessing game unless handled carefully. Sometimes, simplifying the model or focusing on key variables is necessary to get usable insights. Interpretation of results. Even with good data and a manageable model, interpreting the results isn't always straightforward. Sensitivity analysis often highlights relationships, but making decisions based on those insights is another challenge altogether. Understanding magnitude versus importance. Just because a variable has a big impact doesn't always mean it's the most important. Context matters. Conflicting results. In some cases, different variables might show equally significant impacts. Deciding where to focus can feel like a juggling act. Overconfidence in results. It's tempting to trust the numbers blindly, but sensitivity analysis is just one tool. External factors outside the model may still affect outcomes. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.